Welcome and thank you for joining us for the third series in our summer webinar, Professional Development, Buying a Car, My First Loan. All right, so as we have mentioned, as Linda, the lovely Linda has mentioned before, please do sign in with your name and school or district in the chat. These slides and resources will be made available for you after the presentation. They are available in the PD Enroller website as well. I hope Linda might be able to speak to that in a moment. And she's also going to share right now how you will receive your clock hours for this training. Linda?
Thank you. Yeah, so we have 1.5 clock hours for this session. And I have put everybody that registered through Alchemer or Survey Gizmo, I've put everyone into PD Enroller. And once I mark attendance, it'll probably be tomorrow morning, then you will get an email about filling out the evaluation. So if you go in and do that, then your clock hours will appear in the transcripts part of PD Enroller. And what were we just talking about, Amy, that you wanted me to mention?
Accessing the slideshow from
Oh, yes.
via.
So the slideshow will be available in PD Enroller on the attendee page. So if you go to the attendee page, there are attendee files, and those will be located there, and you're able to download them from there as well. So if anybody has any questions, you can message me directly.
Okay, and it looks like we did have one specific question in the chat, Linda. So if you wouldn't mind taking a look at that, I would appreciate it. And thank you again to everybody who has just joined us. If you have not, as a friendly reminder, before we move on, if you could please sign in the chat if you just joined us. Thank you so much.
And to your answer, Claire, yes, there will be an evaluation after each session because they're all different. And it's 1.5 clock hours per session. So there will be a separate evaluation for each one.
Thank you so much, Linda. As we move forward, I would like to begin with a land acknowledgement as I am joining you from the eastern side of the state, from the Spokane area. And I would like to read from of the land acknowledgement from the Spokane City Council. If you would like to mention the name of the lands you're joining us from, we always like to know where people are joining us from across the state. I acknowledge that I am on the unceded lands of the Spokane people, and that these lands were once the major trading center for the Spokanes as they shared this place and welcomed other area tribes through their relations, history, trade, and ceremony. We also want to acknowledge that the land holds the spirit of the place through its knowledge, culture, and all the original peoples since time immemorial. And thank you to those people mentioning in the chat where they're joining from. And briefly, if you have been with us before, this is part of my introduction. I've got to like to do a little introduction of the Financial Education Public-Private Partnership, or FEPPP. We were formed by legislative mandate in 2004, which is really amazing that for 2 decades now, Washington has been putting time, energy, and effort and funds into K-12 public financial education. Our mandate is to increase access to that high quality, diverse financial education through the review of financial education instructional materials, which we have listed on our website, FEPPP.org, with 3 Ps, FEPPP. We also provide professional development like the one you're sitting in now, and in-person training opportunities at no cost. We also have a grant opportunity that is coming up this year, which unfortunately we're not going to be dedicating a lot of time to. But if you are interested in learning more about that, I would definitely encourage you to visit our website. And I'd like to take just a moment to talk about the research-based impacts of financial education. So we see a lot of positive impacts from and benefits from financial education, students participating in financial education, which is amazing. What I've done here is highlight with our letters, or with my letters, highlighted with my letters, with my yellow here, some of the terms that reference specifically the credit and debt impacts that we can make. So we can see that understanding about credit scores, borrowing, and repayment, this is an area where there seems to be an information gap. And so filling in that information can make some really concrete impacts in both the lives of educators and students for the future. All right, and I would like to introduce myself. My name is Amy Cleaver. Thank you again for joining us. I serve as the elementary program supervisor for the Financial Education Public-Private Partnership. You have some of my information up there for you to read, but since this is a webinar about cars and buying cars, I thought I'd share some information about my car experiences. So first car I ever bought was a used white 2007 Ford Focus. That was the first car that I bought myself. And I remember I actually asked, I believe when I was trying to negotiate the price, I asked the salesman if he had wiggle room, which I got a lot of grief for later. My current vehicle is another used black 2007 Nissan Rogue. And my vehicle, my transportation is about 10% of my monthly budget. And also, fun fact about me, I have never purchased a new vehicle. I would love to know in the chat if there's anybody else here who's never owned a new vehicle before. I didn't really realize that until I started working on this presentation. I like to say that I am a financial wellness work in progress. You'll hear me mention financial wellness a lot of times throughout this series and this webinar. Financial wellness is considering personal finance as a part of your overall mental, physical, social, and emotional well-being. Oh, see, I got a lot of people in the chat who have never owned new cars as well. Thank you. I appreciate you guys making me feel a little less alone. So again, financial wellness, considering finances as part of your overall mental, physical, social, and emotional well-being, really wanting to recognize the purpose behind this webinar is to help us all feel more confident bringing personal finance into the classroom and giving a space where you can ask questions and discuss best practices. All right, and I'd like to say thank you and welcome to our esteemed guest speakers who are here today to join us. If you were here last week, you may recognize Tierra Bonds, who is the CEO of Take Charge Credit Consulting, LLC, out of the Seattle, Washington area. And Tierra, I don't know if you want to say hi.
Hello, everyone. Glad to be back. Thank you.
Thank you, Tierra. And this week we are also welcoming Kolby Goff, apologies, from Wendle Motors in Spokane, Washington. And Kolby will actually be leading the first part of our presentation. So I'll give him a moment to introduce himself when he starts that in just a second. All right, we're getting good at this. We're cranking through all this introductory stuff. Briefly, this will be a slightly different organization if you have joined us before. In last week, we looked at credit and debt through the standards and tried to have a conversation about feeling more comfortable and confident bringing credit into the classroom. Today will be more of an applications style webinar in that we'll hear a presentation from Kolby designed for students on buying a car. We will look at state standards, but we'll also look at some classroom resources that meet those standards and look a little bit less at the what and a little bit more of the how we bring this into our classrooms. So if last week I wanted you to feel confident and ready to start conversations about credit, like I mentioned today, we'll be giving you some resources that hopefully take this process all the way through to the end and allow you to bring this into your classroom. And I just want to briefly remind you of our K-12 financial education competencies. And I want to start off this session by really talking about, we focused on credit and debt, but you can hit so many different standards by talking about buying a car. So if you just bring this concept into your classroom, you are hitting more than just understanding how loans work and how we would finance that car. We look at saving and spending standards when we're doing any sort of comparison shopping or evaluating options. We're looking, of course, at the credit and debt, but also insurance and risk management go hand in hand with car buying a car or vehicle conversations. And then anytime we're evaluating options, such as looking at new versus used cars, we're using our financial decision-making skills. So I just want to get everyone kind of primed to have a conversation beyond just credit and debt for today. Awesome. All right. So we are going to start with something just a little bit different. Before I've had some animal slides up here where you could tell me who you connect to, but I am going to launch a poll here. So we're going to do a little quiz today to see what do we all know about credit, debt, cars, just kind of get us in the mood to talk about it. So while I'm loading that up, if you guys don't mind sharing, I would love to hear what was your first car or what do you drive now? And if anybody has a memorable car buying experience, whether it was positive or negative that they feel comfortable sharing, we'd love to know if that exists in the audience so we can make sure that we have space for that as well. So let me see here. All right, we are launching. I hope that you are seeing some questions come up across your screen now. Please let me know if you are not by any chance. But the first question is, what do you think is the #1 reason that people give for paying their credit card bill late? So we have options on here. What do you think is the #1 reason that people do that? Do they not have enough money, forget to make a payment? Maybe there's no late fees on the card, so it's not a priority to make it, or they're traveling. Maybe they're just too busy to make a payment. Ooh, I've got some activity. Thank you to those people who have gone into the chat. And we'll give you a couple more minutes because I have quite a few people. We're going to circle back to this first car conversation as well. I'm pretty excited about some of these. All right, moving on to question #2. I'm going to keep going through them and then we'll talk about the answers. Ranking the types of US consumer debt from highest to lowest. So if I give you 4 options, which is housing, auto, credit card, and student loans, go ahead and rank those. What do you think in the United States ranks from highest to lowest? Be curious what you think. #3, there's no wrong answer to this, right? No wrong answer to this question. But when you use your credit card, what is your main concern? Is it accruing interest or debt? Is it missing a payment? Is it security? Or is it overall spending behavior related to using a credit card? Last couple are car specific questions. According to Kelley Blue Book, the average cost of a used car in October 2023 was $22,500, $24,500, $26,500, $28,500. You can tell I'm a former classroom teacher. I've had some experience making some of these multiple choice questions. #5, we have based on AAA's data, the average monthly cost of owning and operating a car is $94. True or false? And then the last question, based on data from Experian, the average monthly loan payment for a new car is $350, $550, $650, or $725. I love it. Thank you so much for all of the engagement. I appreciate everybody who's popped in to take another one of these. I'm going to leave it up for just another moment, and I'll start going through the answers here. Okay, so the #1 reason that people give for not paying their credit card bill late, for not paying, is they forgot. That is our #1 reason, is that people forgot to make a payment. I'm going to ranking the order of debt from consumer debt from highest to lowest. First is housing. Housing is #1. #2 would be student loans, which dipped during COVID and then popped right back up again. #3 would be auto, and #4 would be housing. And I believe if I end the poll now, you will see the correct answers. When you use your credit card, I mean, whatever your main concern is, what most people will commonly say is security. That's over 25% of Americans will choose security as their main concern when using their credit card. According to Kelley Blue Book, and I did see a comment that this was some shocking numbers to someone in the chat, the average cost of a used car in October 2023 was $26,500. Just crazy. I believe that new cars were over 48,000. Based on AAA's data, it is true. The average monthly cost of owning and operating a car is just under $900. They use gas, insurance, maintenance, but also depreciation is something that they calculate in that payment as well, or in that number as well. And then the average monthly loan payment for a new car, 42% of you guessed correctly, $725. So I'll go ahead and show you the results. You can see a lot of us were very much on. I'm going to go ahead and have the correct answers on there as well. But thank you so much to everybody who participated in that. I love looking at the chat and seeing all of these experiences and everyone's first cars. Thank you so much. Let me see here. It looks like someone has shared a worst experience, and I know that's something that Kolby will probably bring up. So thank you again so much for that little engaging activity, and let's go on and move on to our next section. So I am going to talk briefly about the components of a trauma-informed approach. Now, of course, we're talking about trauma-informed approaches in the context of financial education, but the information I'm about to share would be relevant to any any context in which you would want to bring a trauma-informed approach. So what is trauma? We have seen this slide in our previous sessions, and if you're new today, I will share that trauma, this is a slide from a Trauma of Money training course, shares that trauma can be a single incident, can be an ongoing experience, it can be inherited from our time in the womb, as epigenetics teaches us, or inherited throughout time and or history and our lived experience. Trauma can be acute. An example, car-related example, would be that I was in an at-fault car accident, or I totaled my car, or even being hit. Trauma can be chronic. For example, I am unhomed and have been living in my vehicle for the past year. And it's important to recognize that trauma can happen to any person, regardless of their age, their socioeconomic status, their gender, their race, or any other additional qualifiers. Trauma knows no borders. But we do know that some of our special population students, for example, those who are justice involved youth or our students who are growing up in the foster system, will have, by life experience and definition, have a higher chance of experiencing that trauma and having behavioral internal and external effects from it. Some examples of financial trauma. I think the most common example is to grow up with very little socioeconomic status or power, or grow up in a poverty situation. But it's important to note that financial trauma can go beyond economic hardship. So experiencing any of these examples of financial trauma, an unexpected or costly event that changes everything, for example, will come up with internal and external effects. Internal effects we see most impacted is the ability to set goals, financial goals, and plan for the future. Also, a willingness to talk about money or a complete unwillingness to talk about money can be an internal result or internal effect. Also, financial avoidance, which is a trauma behavior where they sort of pretend, a person can pretend that finances do not exist. This could be throwing away bills as soon as they arrive, or just totally mentally shutting out any sort of financial tasks or responsibilities would be financial behavior, financial avoidance, excuse me. For external behavior effects, we see some trauma behaviors such as hoarding, gambling, or compulsive shopping can all be examples of this behavior down the long run. So these are things that have happened to us, habits that we've accumulated and grown with into adulthood. The behavior of financial infidelity, which is actively hiding financial information or actions from a partner or family member, can be another one of those external effects. So how do we counteract this when we're talking about finances in the classroom and we want to make sure that we are holding space for students who may have experienced this? So a trauma-informed approach, it takes into consideration the whole context of the student, of the person, when we're considering materials, when we're considering methods for engagement and instruction. So we're sensitive to the unique needs, culture, history, and context where you live and work because you know your community and your students the best. We also prioritize safety, trustworthiness, and collaboration. And I know because a good educator always prioritizes safety, right? That's like our #1 job is to keep kids safe. In this case, we're including that emotional and mental safety, and we want to really focus on that. We want to create a space where they're safe to make a mistake or share a mistake, to share any vulnerable moments, or even to ask for help. We connect by admitting when we don't know, when we've run up against the limit of our expertise, and also by sharing financial mistakes or learning opportunities that we've experienced from the past and how we learned from them and how we grew from them explicitly. And then finally, so I'm sorry, I'm building relationships. We also can teach and support emotional regulation, right? And in this case, I'm just going to talk about self-awareness or naming our feelings and recognizing them. This can be a massively powerful tool. I mean, imagine even as adults, if everyone knew how to just identify and name their feelings. I think conversations, especially ones where we disagree, might be able to be a little bit easier. So self-awareness, I have a tool I'm going to share in just a moment, recognizing emotions and how they affect us, modeling when we're choosing to respond and not react, and also things like breathing techniques and visualization exercises can be useful tools for a trauma-informed classroom. As far as, let's see here, trustworthiness and collaboration is another important component of this. I see it as an opportunity to build trust in places where there's sometimes misinformation or miscommunication. And in this case, you could really consider reaching out to community partners like the guest speakers that we have today, particularly those that reflect your students' lived experiences back at them, in order to help them develop trust with financial institutions or with car salesmen in areas where they might not otherwise have that opportunity. So one research that we are sharing today is a feelings chart. This was developed by Arlie Nasahi from the Dene Nation, who has done some consulting work with the the Social Emotional Learning Program here at OSPI. So I went ahead and put a link in there into the chat if anyone wants to take a look at this. This is going to be on the last page of this resource package that I just linked to. And Arlie developed this feelings chart because he noticed that Arlie serves Native youth. That is his population, his mission is to serve Native youth. He noticed with his experiences as he's working with students that when he asked how they felt, they would answer with, I feel like. And then whatever came after that like was more of a thought than a feeling. So an example of that would be, I feel like that's just not really fair. But that's not actually a feeling. Like I feel irritated by how unfair that is. I feel angry by the injustice of this. Those are really identifying our feelings. And that's something that can help us push through some of these uncomfortable moments in conversation. All right, if we have any questions on any of that section, we are going to circle back at the end to kind of reaffirm some of our trauma-informed approaches. But for now, I want to go ahead and introduce or reintroduce again our amazing guest speakers. We are going to, at this point, hear a presentation on buying a car from Kolby Goff. And this is a presentation that is normally given to students. So I would like to invite you to put yourself into the mindset of the student population that you teach and think about how they may react to seeing a presentation like this in a classroom. And then of course, we'll have time for questions and conversation afterwards. So without further ado, Kolby Goff.
Hi, everyone. Thank you for having me. I am Kolby. I work at Wendle Motors. So I am actually a fourth generation here at Wendle. We were founded in 1943 by my great-grandfather. We are currently owned and operated by my mom. So we're one of the few female-led car dealerships out there. And then both my sister and I plan to take over as the fourth generation. In my time at Wendle, since it was legal for me to started working. I started out washing cars. And when I was able to drive, shuttling them around, and then starting right when I graduated high school and went into college, I started selling cars. And currently I work in the service department. I am an operations manager, expense manager, and then I'm filling in for our Nissan service manager right now. So I have a few roles right now, but I have a lot of experience selling cars, including at a different dealership that's not our family dealership.
Kolby, I have to ask, since everybody else answered, well, not everybody, what was your first vehicle that you drove?
It was a 92 Ford Bronco.
Nice. Oh,
Now
wow.
I have a 2022 Ford Bronco. So
Ford Bronco, yeah.
I'm a Bronco guy.
Got it. All right, and I will keep moving, but please do cue me, Kolby, if you need me to advance the slide.
Okay, sounds good. So I always like to point out in these presentations, buying a car is one of the most expensive things you'll have in your life. Your first big expense might start with college, if you're someone who decides to go to college, or marriage if you're someone who gets married. This can all kind of take place in different orders, but on average, a car is going to be your third biggest purchase in life if you're the average person, right after house and a baby. So I always find it important to point that out because it's a big decision and you have to go in and have some knowledge going in, or else you could get yourself in some trouble. You can go ahead and head to the next slide. So I always like to point out, before you go to the dealership, a few things that you need to know is your credit score, first of all, which I believe we might get into a little bit later, so I won't spend too much time on that. Your budget, the down payment of your vehicle, and the loan term. And then I'll get a little bit more into each of these categories if you want to go to the next slide. So starting with your credit score, and credit history. Your credit essentially determines the rate that you're going to get on your vehicle. If it's a used vehicle, then it can be the difference between a 6% rate and a 15% rate or more. It also dictates the terms available to you, and the longer the term, the lower the payment, but the more interest you're likely to pay. And you also could get stuck with an older vehicle with a longer term if your credit is poor. So credit is something I always encourage people to look up before they go, so they know what kind of vehicle they should be looking for in what price range to fit the terms and rate that is going to be best for them. Then the next thing is, it's extreme. This is probably the most important out of all of them. You need to know what your budget is. If you're financing a car, I wouldn't go with the total price, the $30,000 or $40,000 of the worth of the car. I would go with your monthly payment goal. Because in the end, if you're financing a car, you're going to be paying monthly. You aren't going to be paying a full $40,000 all at once. You're going to be paying $300 a month, $400 a month, or $760 a month, or whatever the average is. But what lots of people forget when they take in that monthly payment and what their goal is, what their budget is for their monthly payment, you also have to remember that every car needs insurance as well. So if you buy a Mustang or a BMW or something because it fits in your monthly payment, the monthly payment fits in your budget, the insurance might push you way over your budget. You also have to remember fuel or electricity and charging. Right now, obviously gas prices are super high and electricity prices aren't far behind. We have these electric chargers out here at our dealership, and they take up, it's not quite as much as fuel, but they still take up quite a bit of cost, even to charge it on your electric vehicles. And then you also have to remember there's warranties, accessories, tons of other things that you have to take into account into that price. So when you create your budget and your monthly payment goal, you're going to want a warranty most likely, like especially if it's a used car, because the new cars will come with a loaded up warranty. A used car might not. You might want, if you have a Bronco like me, you might want a couple accessories added in. That's all things that you want to take into account into your budget, that monthly budget, because if you don't, it might come back and bite you later. And possibly the most important thing that people need to remember when financing a car and trying to budget for it is the potential cost of service. Right now, I'm filling in as our service manager, so I see it every day. But we'll have people who buy a new car and don't do a ton of research on the vehicle and end up finding out that it's one of the least reliable cars on the market, and they end up in the service department all the time, having to put hundreds of dollars into fixing that vehicle and keeping it running. You can go ahead and head to the next slide. The next thing is the down payment. I always encourage, so tax and licensing can be roughly about 10% of the sale price. And you want to avoid financing that if possible. So the recommendation in the car industry is typically 10%. I would recommend doing even more than that. Honestly, I would say do as much as you possibly can, because the more that you can put down as a down payment, that's the less you're going to have to finance in the future and put that rate towards. You would be shocked at how many times we see people finance a car, put $500 down, and they have good credit, but in the end they end up paying an extra $15,000 to $20,000 extra on that car just because of that interest rate. So knowing what kind of down payment you can put can also help determine what your budget might be and what kind of vehicle might be best for you. And it'll also help when the salesperson does go ask for what your budget is, you can say, but that's with this much of a down payment, and they can help set you on the right vehicle by doing that. Then we have loan terms, which, as I said earlier, can be approved on credit, age and mileage of vehicle, loan to value, and debt to income is a big one. When you fill out the credit app, it'll ask all the different types of income you have, where you make it from, all of that. And if you don't have a good debt to income, it's going to be very hard to loan a car. And so that might make it even more limited for you. So you want to have a general idea of your credit, what the age and mileage of a vehicle you need is, and then especially your debt to income, because if you have more debt than you have income, you most likely will not get approved on a car. And I see a question in the chat. It says, what is debt to income? So that's essentially how much you are paying each month versus how much you make. So if I make $2,000 a month and I have to pay rent and it's $1,900, then I have positive of 100. So the bank is realistically going to only loan me on a car if I'm paying $50 a month on it, or somewhere in that area. It's something that you'll see a lot of banks and credit unions calculate, and actually they all do when you're trying to loan a vehicle. But it's something that not a lot of people are knowledgeable on, and most people don't even know their own personal debt to income ratio. And so that's something when I was in sales, I would actually sit down and figure out with my customers, help them budget, make sure that a car fit in their budget, and that it didn't push that debt to income ratio into negative territory, because I like happy customers, and I care about my customers and want them to be good in the long run. And so that's something that I would always focus on, because most people don't know what debt to income is or what theirs personally is. And then also it can be super beneficial to shop your personal bank or credit union. So I know in Spokane, we have Spokane Teachers Credit Union. That's who I use. And since I've been a lender through them for a while now, I might be able to get a special rate if I was to go through them or ask them or do a pre-approval through them. Typically, there are other banks or credit unions that will try to match them or beat them. But shopping your personal bank and credit union before you go in could give you a general idea of what kind of cars you should be looking at and what price range. You can go to the next slide. And then also most new car dealerships will offer financing with most tier 1 lenders. This is something that I always specifically like to point out to people because if you find yourself at a car dealership and they only have 1 or 2 banks or credit unions that'll lend to them, it could be a red flag in your car buying process that that's not who you want to buy a car from. Because the banks and credit unions do want their people taken care of as well. And they will stop working with dealerships if they feel like that dealership doesn't have the customer's best interest at heart. So like almost every bank and credit union out there we will deal with. And most new car dealerships specifically are that way. So it can save you a lot of time and money since the dealerships already have those built relationships, and they might be able to get you a better rate than your current lender. So STCU on my vehicle got beat by a whole nother credit union on rate. So I ended up going with a different credit union. You can go to the next slide. And then another very important thing, online, there are so many resources for people nowadays to buy cars. Pretty much any vehicle you look for, you can find consumer reports on, whether it's Edmunds, and it'll tell you fuel efficiency, reliability, safety ratings. So like this one, you can see the Ford Bronco has a resale value of 65.4% when it's bought new, which is very good for a vehicle. Where you might see Kia Sorento is at, I don't know what the actual percentage is, but just a random guess, it might be like 40%. You can go to the next slide. And then kind of some differences between new and used cars, buying a new and used car when you might want to look at each one. New cars will have way more financing options. You can even get them at 0%. So if you have decent credit and you go to buy right now, I think we have a deal on Escapes where you can get an Escape for 60 months at 0% interest rate, which is really good. So if you have good credit and you have a good debt to income ratio, a new car might be what's for you because that way you don't have to pay any interest on it. They also have improved technology, no existing issues. You don't have to worry about what happened before you own the car, and they're easy to shop for. Now, some issues with them could be the value depreciates over time, which we all know. We just saw the Ford Bronco depreciated almost 35%. And newer cars can also have way higher insurance costs. And so specifically, if you go to a luxury brand or a really fast car, insurance can be through the roof on a new car. Where with used cars, the cost will be lower due to value depreciation. So it's already hit that depreciation of going from the first owner to the second owner. They typically have a better value and lower insurance costs, as well as cheaper registration fees. Although we see all the time that they have unexpected repairs and might need to compromise on features and options because there's not a line of 20 of the same vehicle where we can just say, hey, what color do you want? It's going to be, hey, we have that in this color. And used cars, going back to the unexpected repairs, that's one where, as I'll get into later, that's where you want to vet out the dealership you're buying from as well, because there's a lot of dealerships that see a lot more unexpected repairs on their used cars sold than other dealerships. And so kind of going off of from 2 slides ago, the consumer reports, there's also the third-party reviews on those consumer reports. So KBB, Edmunds, NADA, and JD Power are examples of websites or magazines you can read that will give you some insight on different vehicles. And it'll also tell you common problems that they might have. For example, the 2019 Kia Forte has transmission repairs that are fairly common between 12,000 and 23,000 miles. So if you're buying a Kia Forte around 12,000 to 23,000 miles or after, and it hasn't had a transmission replaced, that might be something that you might want to expect. We also see this says early Subarus, but it is still pretty prevalent right now. Subarus in general, specifically the Subaru Outback, are known to have head gasket and turbo problems. Sorry, my walkie was going off. They're known to have head gasket and turbo issues. So if you're buying one at 90,000 miles and it hasn't replaced a head gasket or a turbo, you're going to want to budget for that when you start looking at that vehicle. But it'll tell you that about any vehicle out on the market and what common issues it has. You can go ahead and head to the next slide. And then also, lots of dealerships, like we do this here, will offer free Carfax on the vehicles. So if you go on their website, lots of times there's a Carfax sticker on the vehicle, and you can click that and it'll open up the entire history on the vehicle. It'll tell you if there's any accidents reported, what the service history is, how many owners there are, what it was used for, personal, corporate, and where it was last owned. And this is super important because, for one, you know the history of the vehicle. And for two, if a dealership isn't willing to give you the Carfax on a vehicle, that is also a red flag that you might want to watch out for. Because that might mean there's something wrong with the vehicle that they aren't telling you. And then possibly the most important thing out of them all is research the dealership. You can find a lot out by reading reviews and seeing what the consistent problems are with certain dealerships. We went through about a year ago, ours was in service. We had some communication issues. We've got that resolved. But if you would have looked a year ago, you would have seen that we're having some communication problems. But you can find a lot out by researching the dealership online. Like, are they a local or a chain? A local dealership might be more flexible in the car buying process. They might let you go home and sleep on it, might be more willing to negotiate. Where a chain dealership, the process is going to go really fast. You'll be done 10 times faster than a local dealership, but you're going to pay way more, and there's going to be no flexibility in the process and not a lot of relationship building. You also want to look up how is their reputation and if they respond to reviews. If they're a dealership that every time they get a 1-star review and they just ignore it or send a blanket statement to the person, that means they probably don't care about making things right with their customers. Where if they send personalized messages to each customer, that's usually a good sign that they actually care about the customers they're selling to. And then you also, this one can be, I mean, there's a ton of dealerships who have only started a year ago that are really good. But if they've been in business for a really long time, it's usually a good sign that they're a good dealership, because people wouldn't keep coming back if they weren't. You can go to the next slide. And then kind of like I was saying earlier, your shopping, you can start online and you can find just about anything you want online, whether it's about the dealership, the vehicle itself, trade tools. You can see what your trade-in's worth online through Kelley Blue Book, which I would highly recommend before you go into the dealership as well. And then also, if you are looking for a specific type of salesperson, so if you want someone who relates more to you, nowadays there is social medias for all salespeople have social medias just about. And so you can look up, we have one who prides herself. She just started here. She prides herself on selling to moms who are looking for cars to haul their kids around it. And she prides herself on that and has a social media all about that. So it's super easy to find what you're looking for online and start that process online, even down to the salesperson. You can go to the next slide. And then kind of going off that trade-in, some important things to remember when you're bringing your vehicle in for trade is you need to maintain your vehicle. It makes a difference in its value. So we get the Carfax on every vehicle. And if you bring one in that it hasn't had an oil change in 12,000 miles, it's going to dock the price on it. Or if its tires are super bald, it's going to dock the price on it. So you need to properly maintain it, take it to service departments. I see a question. Yes, it does help to know how long a vehicle is on the lot in some situations. Because if it's really fresh on the lot, but it's a common vehicle, you might be able to negotiate the price down. Where if it's been on the lot for a long time, there's probably not going to be any negotiations in it, even if it is a common vehicle, because the dealership most likely already discounted it to where they're losing money. So it can be beneficial. If it's a rare vehicle, also probably not going to be a ton of negotiations on it. So it kind of depends on what you're looking for, but that can be beneficial. And then going back to the trade-in, just like I said, Kelley Blue Book, you can look up the value of your vehicle. And when you read it, you have to be honest with yourself about the condition, because it's going to ask you, is it in poor condition, good condition, great condition? You have to be honest with yourself, because we'll see people who are convinced their vehicle's in great condition and they bring it in and it's driving on 3 wheels. So you have to be honest. If you're going to use those tools, be honest with yourself, or else you're going to be really disappointed when you get to the car buying process. It also can help out if you clean your car inside and out, because clean cars, whether you think so or not, they are worth more. People are more willing to put more money towards them. And then also remove any personal belongings, because you don't want to forget anything in there. And keep in mind that anything that's broken or damaged will deduct from the value. You can go to the next slide. Another important thing to remember if you're ever trading in your vehicle is negotiate the value of your trades separate from the price of the car you want to buy, and also negotiate it separately from how much you owe on it. Because if you owed $1 million on your vehicle, would it be worth $1 million? No. And if you owed $0 on your vehicle, would it be worth $0? If it was, I will take every single one of them. But realistically, that's not how it's going to work. And so you don't want to go based on how much you owe, because most likely, if you've only had it for a couple years, you're going to owe more than it's worth. If you've had it for 4 or 5 years, you're going to owe less than it's worth. And then sometimes you can sell it for yourself for more than you can trading it in. The only issue with that is your sales tax credit will be lost. So you want to figure that into the deal, because it can be $2,000 sales tax credit on certain vehicles for trading in your vehicle. And it also takes a dealership 45 days on average to sell a car. So it could take you that much or more to sell yours, and you'll have strangers coming to your house if you sell it. But you can make more money on it lots of times if you sell it. Then we can skip that last one because I already touched on that, so we can go to the next slide. And then some things to remember when you come into the dealership is so you want to negotiate your trade separately. Financing paperwork is something I'm going to touch on, and then other products that you might need to know about, such as warranties. You can go to the next slide. So starting with the paperwork when you're buying a car, there's a ton of signatures you have to make when buying a vehicle. It's actually over 30, and it's more than when you buy a house. There's a ton of rules, laws, and regulations on buying a vehicle now. So that is why it is such a long and grueling process to buy a vehicle. For example, you have the purchase agreement, which outlines the basic numbers of the deal. You sign that, then you fill out your credit application, which can be another 4 pieces of paper, then proof of insurance, title, and licensing paperwork, and then your disclosure forms for any warranties, open recalls, history reports, and then you have the contract, which is the actual stack of paperwork. So it can be a long process. And what I would ask you to remember is slow down and read the documents. It can get tiring, and you are going to want to just skim it and blow through all that paperwork, but slow down and read it, because you want to know every single thing that's in those documents if you're going to sign your name on it. and sign yourself to a car payment for the next 5 years. You're going to want to know what those documents say. You can go to the next slide. And then some other things to consider are, I see a question. Yeah, kids under 18 can't buy on their own. They require a co-signer for to buy a vehicle. If you have a dealership telling you that they're going to sell your 16-year-old a car all by themselves, that is also a red flag. Some other things to consider: extended service contracts. If you can't afford a major repay bill, but can fit this into your payment, it's something that you're going to want to consider. I'm a big warranty person. I buy every warranty you can possibly have on my vehicles because I work in a service department right now, and I see the kind of repairs that come in and what they can cost people. And I would much rather pay an extra $20 a month than pay for a $20,000 transmission on my Bronco. You can also get maintenance packages. So that'll pay for a lot of oil changes and that kind of things. I think right now our maintenance package, if you use it in full all the way through, I think it brings it down to like $40 an oil change or something. So it literally cuts it in half from the average oil change price. And then gap insurance. This is especially important if you cannot afford to pay for a car that is totaled or you can't drive. You need gap insurance because it'll pay for the vehicle. If you get it totaled and get in an accident, it'll pay off the rest of your loan on that vehicle. I always highly recommend gap insurance. It saved one of my customers big one time. They weren't going to do it, and I talked them into it. It took a long time, but I talked them into it. And 2 months after buying the car, they totaled it. They would have been $15,000 underwater on the car, but gap insurance saved them. So I am a huge gap insurance fan, especially if you're going to be paying big monthly payments or having long loan terms. And then also accessories are another important thing. I kind of touched on it earlier, but they can add up the price of accessories. So make sure you just take that into account while you're at the dealership. Don't just buy a bunch of accessories just to buy them or get talked into them. Buy what you need. And then if you have extra money after, then you can buy what you want. You can go to the next slide. And that is all. I also have a billion stories. If you guys ever want to hear them, feel free to reach out. But that is all I have for you. If you guys have any questions, feel free to ask.
Awesome. Thank you so much, Kolby. That was so much information. I've seen Kolby give this presentation over an hour and a half. So thank you for getting so much information so quickly. I'm sure we will have questions. I have a couple things. So I was keeping track of Amy's red flags during your conversation. What mistakes did I make in my car buying experience? So my first one is I'm pretty sure I have always financed my tax and licensing. That is not something that I considered before. Can you talk a little bit about that again?
Yeah, so if you're financing your tax and licensing, you are basically financing money that's not even going to the actual vehicle.
Right. If I roll that into my loan.
Yeah, you're just rolling it into your loan. And if you do that over multiple loans, so say you keep trading in your vehicle, that tax and licensing keeps rolling over. And next thing you know, you're paying for $10,000 of tax and licensing on a $20,000 vehicle a few loans down the road, which is not fun. You don't want to pay for something that you aren't actually getting anything personally out of. I mean, you might, but realistically, you personally are not getting anything out of that.
Yeah, absolutely. Now we're in Washington, right, where we are bordered by Oregon, which has no sales tax, right?
Mhm.
But the way that car licensing works in our state is that does not actually save you money. Is that accurate? Do you know? Because I'm pretty sure you pay the licensing fee. Sorry, go ahead.
So it typically, you can't run from your tax and licensing fees. is how it works out. So if you drive to Oregon, you're still going to pay the Washington tax and licensing fees, or you're going to pay for it somehow if you do get out of it. Eventually, it's going to catch up to you and you're going to pay for it. So going across borders really does not help you all that much in terms of trying to save any money. Maybe going to Idaho for the lower prices, because they do. Southern Idaho specifically has pretty low prices. So that can save you some money. But going like down the border to Oregon, it's not going to save you money in the long run.
I found that out when I registered my car here from out of state, and I paid the difference in the taxes. So that
Yep.
was fun. Another red flag for me, by the way, if anyone else shares my red flags, please let me know in the chat that I'm not alone. I had really great credit when I bought my last car, and I didn't even look at a new car. It did not even occur to me that those financing options and that interest rate could be that low for a new vehicle. So I think maybe some of my mentality, I know there were some people in the chat who also have not bought new. I think in my mentality, I always just assumed that used cars were the better deal. But depending on the context of the situation, that might not be the case.
Yeah. Yeah, we especially saw that during COVID. There were times where I had a customer one time. So we had 4 brand new EcoSports that we were selling, Ford EcoSports, and we had one used one. And the used one was the same exact price as the new ones with a higher interest rate. And she bought the used one strictly because she was adamant the used cars were the better deal.
It had to be the used part
Yeah.
of the vehicle. So kind of
And-
expanding that thought a little bit, that mindset a little bit.
Yeah, and I had to have told her 100 times throughout the process the new car is the way better deal, but she was just stuck in that mindset. So that's one thing, you don't want to get stuck in that mindset, because sometimes the new car is the better deal and it might save you more money. Plus, if you're paying 0 interest or way less interest, then that's more of that money that's actually going towards the vehicle and not going out of your pocket to somewhere else.
Yeah. And then my last one was, I asked for a Carfax when I bought my first car, that Ford Focus I mentioned. I was like, oh, and you have the Carfax, right? And he was like, no, yeah, but that's really just only going to tell you if it's ever been this or that, mumble. And I, at the time, was probably like 22. My first car, I was at a dealership by myself negotiating without any like adult support. And I didn't argue with him at all because I didn't feel confident to even like question him at all. And then down the road, I found out the car actually had been in an accident and had some pretty serious repairs done to it previously that I had never known. So that's just a mention. We had chatted about that when we had met at the rehearsal. So that is my advocacy for Carfax, everybody. And that red flag of, if they are telling you no, there is a reason. And I think quickly, I'd just love to touch on too, like the sales experience. Because I definitely, we've had some people in the chat who talked about having like just a really negative, maybe we could call it that stereotypical car sales experience a little bit. And so do you have any tips for people, especially knowing like the younger generation? I mean, I've seen kids practicing before they're making a doctor's appointment because they're terrified to make a phone call, right? So we're talking about now going in person and like negotiating a price and dealing with some of that in-person pressure. Do you have any tips for people to kind of just, prepare for that?
Yeah, I mean, for one, pretend like you're talking to a friend. Don't be afraid to ask questions. Or like, if you feel super uncomfortable and you tell the salesperson that, it's gonna either completely mellow them out, or they're gonna keep going and you know that you need to go somewhere else. I've always been, if you have a friend or family who has a salesperson they really like too, don't lose them. Use that salesperson as much as you possibly can. Because if you find a salesperson you can trust and you like, it can be really beneficial. I just had last week a customer from 3 years ago call me. He lives in Colorado now, and he's trying to buy a car down there. And he was like, hey, I want to come up and just buy from you. And I told him, no, you don't need to do that. That's a little unreasonable. but found out that the dealership he was at actually wasn't going to give him the Carfax. So I looked up the Carfax for him and found out it had a salvage title, and they weren't going to disclose it to him.
Wow.
So if you find a salesperson you trust, or if you know someone who has a salesperson they trust, use that person. Treat them like they're a family, your brother or sister, when you talk to them. And it might make you feel a little more comfortable. There is major stage fright though, and I get that.
Yeah. And then see Tierra.
Thank you,
Are you right
Amy.
there?
And
Thank
thank you.
you.
Can you hear me okay?
Yes.
Okay, sounds like there's a delay. I just wanted to thank you for all of this information, Kolby. Amy and I were talking about how beneficial this would have been when we were younger. But I had a question about leases. Um, from what I see, I don't think I've seen a lease on a credit report. What is the difference in the way that it reports? Or maybe I have seen it and it just reports the same as a regular auto loan. Do you know about leasing as it relates to credit reports?
Yeah, so leasing's really complicated. I don't work on the finance side. I did have a slide in here with lease and buying info, but I took it out last minute to save some time. Leasings can kind of be a win-win-win. I don't know necessarily how it'll report coming across to the bank or credit union. But it can be a win-win-win because it'll have lower payments. It can have a lower rate than a regular purchase. And it can be a win-win-win situation, like I said, because you get the option at the end, if you keep it under the set miles it has, then, and it stays in pretty good condition, then you could sell it outright for more than what it's worth. So if it's worth $18,000, but the price that was set at the beginning of the loan is $22,000, then you get $22,000 instead of 18. Or if you decide to trade in for another vehicle, you might actually get to lower your payment even more on the next vehicle if it's in really good condition. Or if you want to buy it out, you can buy it at the set price. So if it's worth more, say it's worth 30,000 and the set price that was expected after that 4 years was 22,000, then you can buy it for 22,000 and have a $30,000 car. And then you could go sell it elsewhere or drive it if you really like it. I don't know necessarily how it reports, but I do know they have the set price of what it's expected at the end of the loan. So if you buy it for 30,000, but they expect it to be worth 20,000 in 3 years, then that's the price that's going to be set 3 years down the road. I'm a huge fan of leases if you're someone who doesn't drive a lot. If you're someone who drives a ton and uses their car all the time, I don't know if I'd necessarily recommend a lease. Or if you drive more than the average person, but if you drive less than the average person, I would absolutely recommend a lease because you're going to get used car payments on a new car and you're going to be in a win-win-win situation at the end if you keep it in good condition, stay under that miles.
Awesome. Thank you. We have a
Thank you so
question.
much.
Oh, sorry, Tierra. So one more question in the chat. Please clarify the reason we do not want a salvage title. Not good. Usually they are very cheap. Why is it a bad idea to buy them?
You don't necessarily know what it's from. So I had someone that brought theirs into trade one time. And it was a salvage title, and we told them that, and we asked them what it might have been. And they had no idea. So we called the previous owner and found out that it had been in a lake for an entire year and got towed out of the lake. So a salvage title can be, it can be very sketchy. You might not know exactly what it is. I'm not an insurance broker, so I'm not 100% sure, but I do not think there's any insurance companies that'll actually cover the salvage title vehicles. If there is, then it's probably super expensive. But I have never sold a salvage title vehicle and I never will sell a salvage title vehicle. If we ever get them, we either send them to the scrap yard or sell them for parts. Because usually there is, after you buy one, they come back to the repair shop over and over and over again for the remainder of that vehicle's life.
That's crazy. Awesome. Thank you for clarifying that. I want to make sure we have time to go through our next section, which is talking. We're going to circle back to some of the conversation that we had last week. And thank you again, Kolby, for that amazing presentation. If I had even been exposed to half of those ideas before I had gone to buy my first car on my own, I think I would have made a lot different financial choices. So thank you. So let's talk about why good credit is important. We saw on Kolby's slide, that was one of the first things you need to know before you walk into that dealership is what is your credit score. So if we're thinking of younger students, that's going to be something important for them to start building. So Tierra has some information here on why good credit is important. And we can see.
Yes, with a clear example. Thank you for having me here, Amy. Thank you all for showing up. And thank you, Kolby, again, for all of that information. Like Amy said, I would say 10% of that, and my life would have been much better. So thank you. And I also love how you mentioned credit history when it comes to buying a car. I had a call today from someone who has been in the States for 7 months. They're from Australia. And so they got here and, was completely overwhelmed with our credit system because it's very different than other countries. But did the work and got her score up to about a 710 just in 4 months of being here. And then went to apply for an auto loan and got denied. So although her credit score was very good, she didn't have the credit history. And so I love that you point that part out. But I wanted to share this example of, real life situation of comparing the interest rates based on your credit score and how that plays a role into the price of your auto loan. And currently the average interest rate for a new car is 6.7, about 6.7%, versus 11.9 for a used car. So in this example, we're looking at APRs of 3.6 and 11.3. So the lower credit score is getting that 11.3% interest rate, and they have a 630, which, is a decent, it's an okay credit score, but still the impact on their APR is significant versus the higher credit score with the 760 is getting that 3.6 interest rate, which in today's world, 2024, it looks like the lowest it could be is about a 6.7 if it's a new car. So we can just see how these numbers would play from here. But the lower credit score, their monthly payment, and this is on the same car, $30,000 on a new auto loan with a 60-month term. So the credit score of a 630, their monthly payment is 658 versus 548 for the higher credit score. And what that does to their total interest paid, the higher credit score is paying about 2,800 in interest versus about 9,400 for the lower credit score. And so about $6,000, almost $7,000 more that the lower credit score is paying. And I mentioned, credit history at the beginning of this. Credit history does play a role into your credit score as well, but also, just looking at the credit history alone, separate from credit score, like Kolby said, is a key factor as well. So I'm curious if anyone has looked at their interest rate with their auto loan, if you know what it is, or if it's something that kind of just, when you were signing the papers, you noticed it, and then, just out of sight, out of mind. Because I was teaching a credit workshop with youth. They were between the ages of 18 and 25. And one was told when they bought the car that their interest rate was X amount, but in that workshop, we actually went into his bank account and saw that the APR was much, much, much higher. So, Amy, you mentioned, the stereotypical encounters that we have with dealerships is real, especially when it comes to our youth. So, presentations like Kolby, then, us getting this information, sharing it with the youth is so important. Like Kolby said, to look over those documents, not just go by what the salesperson or the finance person is telling you, but really empowering our youth to look at those documents before signing, because it could be very different from what you thought it was. So I would pause there,
Absolutely.
Amy.
Thank you so much, Tierra. Absolutely. And this is connecting back to Robin. You had put a kind of a question in the chat a while ago. I wanted to make sure we referred back to. Is the score the only thing that someone's going to look at when they're evaluating your loan options for a car? And like Tierra said, there are a lot of things involved in your credit score that they'll look at in addition to just the actual number, like the credit history. So I would love to share very quickly a resource with you now. This is not the resource. This right here is the standards related to credit scores. So if you've been in any of my previous, the last 2 sessions, you've seen we've looked at deconstructed standards. This is supposed to be taught. There's a lot of words here. These words are wording, am I right? And there's a lot of content here that is intended to be taught the senior year of high school. I don't know how many of you, your senior year of high school would have been like prepared and in a good place to absorb this information. I would not have been. And so this is a lot. I could spend 90 minutes just going over this information within a credit score with you. So I would like to share with you a resource that I would recommend that everyone kind of maybe bookmarks or pins where they can. I'm putting the links in the chat now. This is from the Annie Casey Foundation. It is part of their Keys to Your Financial Future curriculum. This curriculum was developed for students aged 16 to 26, and it was developed in part with students who had experienced the foster care system. So students who had literally no stability or guidance throughout their youth and developing these skills. So they really wanted those voices heard in this curriculum. It's very comprehensive, and I gotta tell you, it has some great information. What I've linked there is both the curriculum itself and then the key 2, which is understanding credit history to open the door to housing, jobs, and more. And then I've linked the participant guide there. The facilitator guide is a separate issue, but if you want to, obviously that's more the lesson plan. The participant guide to me is really all you need. 32 pages of credit report information. For example, okay, now the left side here is an order and review your credit reports checklist. You can find it on page 17. It'll tell you where to get the reports. It'll walk you step by step through them. It will give you your 3 credit bureaus and checking out through to make sure everything is correct. Also, if you serve students who are under 18, I've seen a lot of questions about students who are under 18. On page 9 of this, there is a guide to getting credit reports for your students who are under 18 years old. And if they're experiencing the foster system, what their rights are related to getting their credit score, which they do have. On the right side of the screen here, you'll see an example letter for disputing an error on your credit report. There's also a task list for that on page 21. And so if a student or you need to dispute a credit report, something on your credit report, boom, here is a template of a letter that they can use. It is a wealth of information in 32 pages. And I really wanted to share that because if we couldn't answer, I mean, honestly, it would take 90 minutes to go through all of those credit score minutia. If we can't give you the answers, we want you to know where to find them. So an excellent example of a high quality resource. And then Charnel, I saw your hand up. I want to make sure I hold some space for you as well there.
I was just going to add to what Tierra was talking about with the better credit score, low interest rate, people with lower scores and higher rates, that oftentimes when people go to dealerships, their salesperson will tell them, well, don't worry about your rate being high right now. You can refinance the car in a certain amount of time. And so it's okay. And while that can be a possibility, I've talked to a lot of people who just kind of set their mind that absolutely going to be able to refinance. And that may not be the case because it really depends on the value of the car at the time that they go to refinance, what their other credit obligations are, how much it would take to pay that car off. They may only be able to finance if they can pay down the amount that they owe on the car. And so it's fine to think that that's something you can explore later, but I would encourage not to buy counting on the fact that you would be able to do that. It's a maybe, and it can happen, but not always. And I've talked to a few people who have just been so frustrated by that because they felt like they were getting this guarantee that
Mhm.
wasn't. It was a little bit of a sales tactic and kind of planting a seed all at the same time. So I just wanted to add that because it comes up a lot. So
Thank
that's
you,
all.
Charnel. I think that's so important. I have actually heard that complaint and an issue with mortgages the last few years as well. Oh, but you can refinance as soon as rates go down. I'm still waiting on that. I don't know about the rest of you. So absolutely. So we wanted to talk just really quickly about establishing and building credit. So like I said in the chat, we've talked about you guys have your students in the teens, right? They're looking at buying their first car. We know they're going to need to establish and build some credit to do this. So what are some common good tactics for doing this, right? I believe Charnel was actually the one who mentioned last session as well about secured cards that are offered through Verity Credit Union. So a secured card or a credit building loan can be an option through a financial institution. Would note that those credit building loans can sometimes be those services, which Tierra is going to tell us just a little bit about on that next slide. Also, establishing credit by using a cosigner. When our students have family members that are willing or able to provide cosigning, that is fantastic. There is a lesson linked here on cosigning loans and sharing credit. And I had been talking to Tierra about this story earlier. It's really important, I think, on both sides of the fence or the agreement to understand cosigning. You want to understand it so that if someone comes cosigns for you, you can live up to your responsibilities in that as well. We never want to let down people close to us. We never want to cause the people close to us harm, but that can happen if we don't demonstrate responsibility with cosigned loans. For example, I co-signed a loan for a former romantic partner that turned into an absolute disaster for me and my family that took me years to get out of. If just some of these lessons can alert our students to those issues, that these co-signing can be a relationship that lasts for years, whether it's you, whether it's a family member, it's something that isn't always touched on. If you think it's relevant for your kids, it's a great lesson from the Consumer Finance Protection Bureau. Again, if they have family support, they can also become an authorized user on someone else's card. So for those students that have that support, that's fantastic. This is where we want to involve our family members. And really, I would say advocate for, I saw it a lot in the chat. My parents were heavily involved in my first car buying experience. That's why I said the Ford Focus was the first car I bought. But I wouldn't say that they were guiding me through the process. I would say they tried to do the process for me. And I'm sure that was done out of caring, but it would have been more powerful for me to have been involved in the process. So just encouraging that whenever we have opportunities. But we got to talk about some of these credit building things that we might see that our students are for sure seeing commercials for, because they're not all the magic button that we think they are or could be, right? So Tierra, we had been talking about this earlier, so I went and found the app because I wanted to see what I was thinking of, right? So the first one, I mean, come on, you guys have all seen the Credit Karma commercials, right? I mean, we've all familiar with Credit Karma. And Tierra, you were saying they just do really good marketing. That's really kind of their main thing, right? But as far as Credit Karma, okay, so then we have credit boosting services, which is also like Experian Boost, which is the ad that we pulled here. Then we also have some of these these services that will report rent, cell phones, or utility bills, and they will report that as credit earning services. Rental Karma. I don't know if anyone's heard of Rental Karma in this. That is the most common one that I have found. And so could you remind me, Tierra, would you mind, what was the Experian it's boosting, but it's boosting a little, right?
Yes, it's a small booth, and then it's only for Experian. So there's three main credit reporting agencies, Experian being one of them, and then Equifax and TransUnion. So your score going up at one of those credit reporting agencies isn't really effective unless you're getting something that only uses that credit reporting agency for approval. But when we're getting an auto loan or a mortgage, credit cards, they're checking all three credit reporting agencies. So just because the Experian is higher doesn't help us out entirely. And then another con I would say is just the amount of access that we're giving to Experian when we sign up for something like the Experian Boost. So they're getting accounts, passwords, and bank account information and all of these different things. So I always try to, like you said, Amy, empower clients to involve them in that process, share the pros and cons, and then, lead them to outweigh if, that few points for one credit reporting agency is worth, the negatives of it.
Yes, and thank you for reminding me of my favorite thing to say to educators and students. If any service is free, you are the product. Your information is the product. That is the basis of social media, right? It's a free service because our information is the product that is being sold. So for any of these, like Tierra's saying, we want to weigh the pros and cons. I think it's important for students to know that just because they say you're going to get that point boost right away, that is not a magic bullet that's miraculously going to get them the credit score they need to buy the car they want. It's limited in the benefits, and make sure those benefits are actually going to work for them. I saw a question about the rent and how that's actually working. So it's my understanding, and please correct me if I'm wrong, Tierra, because I was just doing research on a credit card company that Wells Fargo actually backed, which is allowing people to earn points on rent, which is never done before. So the reason why that doesn't usually work is because what landlord is going to want to pay those processing fees for the credit card charges when they don't have to. So it's my understanding that the rent itself is not actually what's getting recorded. It's that payment, and then that third party service company is saying, you paid it and we are recording it. But it's never actually coming directly from the landlord. And I apologize, William, that is the most detail I could offer on that. On that information. So just being really aware of these free services. Oh, Tierra? Saw you on mic, so I thought you might want to add something.
To that, Amy. Yeah. Thank you. I was just going to add to that with the rent reporting. I've seen it a few times report negatively on consumers' credit reports. I don't know what that is resulting from, but Amy, just the way that you explained it is accurate. Which makes me think that might be why sometimes it's negative. The landlord might accidentally, put in that it was 30 days late, or that it was not paid, or just not report. And what does that do to the credit report? So I've only a few times, but I have seen it where it's reporting negatively to the credit report. And then, that's causing their score to go down 50, 100 points, just from a product that they were using to increase their credit score. So that's another thing to look for too.
Awesome, thank you. So Susan said I cut out when referring to Credit Karma. So just really quickly, just gonna recap that what we were saying was, it's worth it to evaluate these products and look at the pros and cons of them, but to recognize that it's absolutely not some magic bullet that will instantly raise their credit score to, the exact number they need it to be to get student loans or this car, that the benefits are limited to one credit reporting company, and that any free service is us giving our information as the product. And so to be just aware of that. as we're telling students or helping them make choices about these services that they're absolutely seeing. All right, y'all, we're into our last 5 minutes, and I'm going to share some resources unless anybody has any other questions or something they want to chat about. So if I see something in the chat, I will. Now, I'm going to let you know if we don't get through all of these. These are all linked in the presentation, which you can find on that PD Enroller website. So I'm going to take you through a few of my favorite lessons and activities for bringing this information into the classroom. Starting with our youngest learners. If you serve young learners or kids who just like a good story, this is from the Consumer Finance Protection Bureau. It is called Sharing a Story About Borrowing. It's not the most amazing title, but if you were to click on that link, you're going to find both a story featuring the Money Monsters, which is a group that CFPB has written a couple different stories about. They're fantastic, as well as a worksheet and a lesson plan on being a good borrower and the trust involved in borrowing. So this would be a foundational lesson related to understanding the roles of our character and our financial reputation in lending and borrowing. Moving on to cars, we have another Consumer Finance Protection Bureau lesson here that I love. This is customizing your new vehicle. And what I showed you here was the truck, but kids can actually choose from a sedan, a sports car, an SUV, and a truck. And you see all of these different options for customizing it, everything from the style, audio, wheel, and tire. And they'll be different according to the vehicle, right? So students will kind of customize their vehicle and then they can add up the total here, really wanting them to recognize options affect a total cost. The difference between sticker price and net price is something we can explore with this. And hey, are we always going to get everything we want when we're making a big purchase? Or is there a point where we run into that limit of what our resources can cover? Wants versus needs. This would be a standalone lesson. I think you could easily do this with elementary schools, and you could customize it to take it all the way up to high school. Then we got to kind of get into the math. The math's got to math a little bit in this. So here is my first option for that. This is a plug and play, what I call plug and play math lessons. We're not going to focus heavily on the algebra. We're not going to focus heavily on the math concepts here, right? What we're really doing is having them put the right numbers multiplied by the right numbers into the right boxes. And if they do that correctly, they're going to evaluate a used sedan X, a used sedan Y, and a luxury sedan Z. All of them have different mileage, all of them within about $1,000, under $15,000 for all three. And we have a set interest rate for this one. So that one is just looking at terms. This one's really looking at loan terms and deciding between these vehicles. Let's look at loan terms. So there's a lot you could do with this. Like I said, a plug and play kind of math lesson. I'm going to keep going until the 2 minutes is up. We will end promptly at 5:30. I also have comparing auto loans here. So this one I was triggered to go and find after chatting with Tierra and looking at the slide that we included today, because I wanted to be able to provide a lesson where you were evaluating the difference in interest rate, right? Which we know would come from credit score. That could be one reason why. So for this, we could finance for a 5.5% APR or 7.2% APR. And this lesson follows Molly through her journey of buying a Jetta. She goes in, she does her first offer. She goes in and finds out she doesn't meet the terms. And so she has a second offer, and then she's going to read the fine print before she actually buys the car. So it's a multi-unit lesson that I just absolutely love. Units wise, I have to mention the Modeling Our World for Mathematics, which is a modularly designed mathematics course. It was developed locally by OSPI with input from educators across Washington. It's designed to follow geometry. If I have any math teachers in here, it is totally open source, housed on OER. And the unit that we want to talk about here, because it's a whole math thing, right? Unit 4 is finances for life. And topic 2 is loans and consumer credit. So you can see kind of an example here on the left-hand side. This is a more investigative math. This is not a plug and play math lesson. This would be more for your kids who are on grade level with math, or who have the independence or, management to pursue research independently. It would be also a great extension activity. And the last one I want to mention is that NGPF makes a whole unit on buying a car. You can see like their lesson, they have a whole lesson on just comparing new and used cars, leasing and buying. So if there's something you just want to focus in on, one area of buying a car you'd like to focus in on, this would be a fantastic way. They also have a lot of activities like videos, questions of the day, little standalone activities that make NGPF very engaging and very UDL inspired for kids. And as always, I'm going to encourage you to keep the components of this instruction trauma informed. Thank you so much to our guest speakers. Thank you for Tierra for being here 2 weeks in a row. Thank you, Kolby, for sharing that presentation. I hope you all see the power in bringing our community partners and experts in to speak to our students and help us. We don't have to be experts on buying a car. We can reach out to people in our community who can. So thank you so much for being here. It is 5:30. Like I said, I want to make sure I end on time. If you have any questions, or if you're looking for specific resources, I know there was a couple people I would love to connect with after this who had specific questions about their kids. But I want to say thank you and wish everybody a good night now. Thank you so much for joining us. Oh, and we have 5 more sessions coming up, just so everybody knows. Teaching about taxes is coming up next week. We're going to make taxes fun. You didn't think we could, but we're gonna. We have a great session on investing with the stock market game coming up for 2 weeks. And then we're going to be talking about getting banked, scams, fraud, and identity theft, and then just trauma-informed considerations for talking and teaching about money. I am going to give away prizes right now, even though I know that some people have already left, because I was really excited to spin the wheel. So I'm going to spin the wheel. And if it, we'll just change the must be present to win part so that all of that works. So let's see here. We did the wheel. We should make sure that we have the wheel. Oh. Can you see the wheel? All right, here we go. Click to spin. Now, this is everybody who registered for this. So it might not be everybody who's actually in here. We'll see. This is. Oh. Ah. Is it Jordan or Stephanie? It's Stephanie. So we'll record that. And if Stephanie was in this recording, we'll have a prize for her. We're going to do another one. We have to remove Stephanie for fairness. I remember making that mistake in my 7th grade classroom once, right? Oh my goodness. This thing is like clickety clickety. Lily, we have another winner in Lily. Awesome. All right. Thank you so much for anybody who stayed around for the wheel of prizes. I appreciate you. And we'll be in touch with the winners later. Oh, let's see here. I can only find teaching with taxes and PD Enroller. Yes, the other sessions are posting. I have been finalizing some of the speakers. So those will be coming up in PD Enroller soon. Yes, absolutely. You can still sign up for them though. Awesome. Oh, Stephanie, congratulations. All right, thanks everybody. If you want to stick around and ask any specific questions, please feel free. Other than that, we are going to go ahead and end today. Have a good one.